Good morning. This is a new edition of the Financial Markets Talks, this event that we have been running here at FGV in São Paulo. And today we will talk about the evolution of fast payments, and we're going to have a global perspective. So we'll start with a presentation from two World Bank officers. First, let me introduce them. Nilima Ramteke is a senior financial sector specialist at the World Bank, and Andrea Montaleone is a financial sector consultant at the World Bank. They will share with us a presentation for approximately half an hour or so. And then we're going to have two comments. First, by Rafael Bianchini Abreu de Paiva, a coordinator of the Central Bank of Brazil, and then José Luiz Homem de Melo, a partner at Pinheiro Neto Advogados. Before I move ahead, I must read a disclaimer, which goes like this. All statements expressed by Fundação Getúlio Vargas employees and guests in our online events and broadcasts exclusively represent their opinions and not necessarily FGV's institutional position. We also reiterate that everyone present here agreed to participate in this event on their own free will, and they consent to be recorded in this broadcast, which will be posted later on FGV's official channels. To continue with this transmission, I must ask that our five guests express their agreement by verbalizing or signaling their agreement. So, if you don't mind. Okay. Thank you. And with no further ado, Nilima and Andrea, the floor is yours. And thank you very much for being with us today.
To present this fast payments work which we are doing at the World Bank. Just to add a brief about myself and introduce myself, I'm Nilima Ramteke, Senior Financial Sector Specialist, which you have already introduced me as. We worked at the global team, which is the payments and market infrastructure area. And this unit focuses on the various payments and market infrastructure areas, including the fast payments. So this is the global team, which is based in Washington, DC. And we also support a lot of countries in this area. And with me, I have my colleague, Andrea, who would definitely, once I hand it over to him, he will introduce when he starts speaking on that. To come on the subject on fast payments, as you know, that the World Bank provides assistance, both technical and financial, for development and implementation of safe and efficient national payment systems. It also participates and contributes to the work being done by the standard setting bodies like the Committee on Payments and Market Infrastructure, which is based in Basel. The World Bank has been monitoring closely the developments in the context of the adoption and operations of faster payment systems by central banks and private sector in the world. And the World Bank has accordingly started documenting the international best practices and different models pertaining to various aspects of fast payments systems as part of the toolkit published. And some of those would be presented once my colleague Andrea presented. And we have come out with this toolkit, which we refer it as FAST with a double T, which is a frictionless, adorable, safe, timely transaction. This is the project name, and under that we have come out with the various case studies and all, which will be referred subsequently. If we go by the definition of fast payments, the CPMI, which is the standard setting body, has defined it as in its publication, which was done in 2016. It is defined as the transmission of payment messages and the availability of final funds to the payee, and which occurs in a real-time or near real-time basis, and which is available on a 24/7 basis. And these are the main characteristics which you can see on the slide as well. it is the availability on a 24/7 basis. And 1 minute, just my screen went off. Yeah, so it's available on a 24/7 basis, and the access to the funds are available to the payee. Payee means the beneficiary on a near real-time basis. And this supports the fast payment system supports a lot of payment instruments, which are the card payments, bank accounts, or any type of payment instruments, including the e-money. The use cases also supported by FPS are the P2P payments, which we are all aware. P2P payments are basically person-to-person payments, person-to-merchant payments, businesses, we call it merchant businesses. So P2M payments. Then you have the P2G payments, which is the payment to person-to-government payments, and the reverse as well as possible through this fast payment systems. This also, because the fast payments, because of the access to the banks and non-banks, and also brings in about interoperability between the stakeholders, which is the banks and the non-banks. And this has provided an access channels, which has actually been leveraged by the various stakeholders to provide value-added services as well. We move to the next slide, Andrea. Yeah, and this is where we see that the boosting of financial inclusion, which is being facilitated by the interoperability between banks and non-bank players. Also, this infrastructure fosters in competition and innovation by allowing integration of overlay services and exploiting the alias. Alias is basically about an alternate to your account, which are being used and which are being facilitated in the fast payments, like your mobile number. You can use a mobile number instead of your bank account, sharing your bank account details with the external person. So you can just share in your mobile number or your email address, and that has the FPS has facilitated using of that. So your information is protected to that extent. And that has actually helped in people, the takeoff of the systems as well. The other is about the QR-based payments and the access channels, which has improved the usage of this infrastructure. The 24/7 availability, and as I mentioned about, coupled with interoperability of payment instruments like your bank account, your e-mobile account, or your card account between the PSPs has facilitated time-critical payments and payment at times of emergencies. The usage of this infrastructure at the time of the COVID-19 was more seen evident, not only for person-to-person payments, but for emergency cash transfers as well, when in some governments use this infrastructure for cash benefit transfer to the beneficiaries as part of the social safety net payments. This has also deepened the acceptance of digital payments, which has helped in also lowering the cost of the payments as well. And because of the traction and the volume of transaction, the use cases have also being developed, which has further enhanced the usage of this infrastructure. We move to the next slide, Andrea. Yeah. Now the various stakeholders which are there is shown in this slide is about the regulator and overseer, the owners and operators of the system, participants definitely, and also the third-party service providers, like you have all the various Googles and the Amazons and all using this infrastructure for providing various value-added services to their customers. And definitely the end users who are center for all this infrastructure and developments which are happening in this space. Coming to the next on about how this various stakeholders get motivated and what are the motivation factors. We see that this different motivations are there for different stakeholders. But the FPS provides a common platform and framework which enables and facilitates stakeholders to drive their motivations individually and collectively. Like for the central banks, the motivation is for driving digitization of payments, promote innovations, and definitely financial inclusion is their objectives as well. For the system operator, it is about the push from the market and how to enhance the consumer convenience. These are the motivations that also help them in promoting innovations as an operator. For the system participants, definitely they want to look at the consumer's experience so that they are the consumer sticks to their infrastructure and their for them as a PSP. And then that is what brings to the competitive position which they want to strengthen as a participant. For the user is about the convenience, the access, and also the cost is one of the factors. We have seen that most of the fast payments or major fast payments are providing services at almost free or negligible cost to the end users. Next to this is about the role of the central bank. The central bank actually plays a major role, and they play different roles as well. As an operator, as a regulator and supervisor and overseer of payment systems, they have their own role, and as their catalyst and the developmental role, at times they also implement and operate retail payment systems, including the fast payments. The central banks typically, as I said, play a major role as a regulator and overseer, and this is basically to ensure that the systems which are in operation are safe and sound enough, and they don't bring risk not only to the system they operate, being operated, but also the confidence of the public is maintained. And that is where they always keep on monitoring and ensure that they have a monitoring mechanism which are safe and efficient, that which ensure safety and efficiency of this infrastructure. At the same time, there are requirements on the owner and operator. If they are operating the system, definitely they try to, and they implement the practices which they have put in for the private sector as well, so that they are abiding by the same standards which are applicable to the market. And this is about the responsibility for ensuring that the operators also abide by the standards if they are doing this role as a supervisor. So as I said, the central banks have multiple roles as an operator, overseer, and regulator supervisor. We move to the next slide, Andrea. Yeah, thanks. As we have seen, there are various benefits in the previous slides, which the fast payment system provides, and which serves the interest of various stakeholders, whether it is the central bank or the operator or the users of the infrastructure or the PSPs, which actually contributes to the financial inclusion, innovation, and digitization, and which we see that has accelerated the proliferation of implementation of fast payments in the world, and we see at currently that more than 100 implementations of fast payments are there globally. We move to the next slide, Andrea, and Andrea has already prompted me for the time, so I will try to be efficient enough in this. We have this the benefits has translated into the usage of this infrastructure, and which has led to attraction. And we see a huge percentage of increased growth in this volume of transactions which are being settled through the FPS infrastructure. For Brazil itself, we see that in the last 1 year, it saw a growth of almost 230%, nearly 230%. So which is quite a large percentage of growth on an annual basis. And this slide definitely presents about various CGAR, which is there in India, Brazil, and Malaysia, and a few other countries as well. We move to the next slide, Andrea. Yeah. this in a nutshell presents the various volume of the volume of transactions settled through the 4 case studies which we are presenting over here: Brazil, Australia, India, and Thailand. How the annual transactions volume which are there, and the CAGR which is expected by 2027. Coming to this on the features and functionalities of the fast payment system of these 4 countries. The payment instrument supported by almost all is about credit transfers, which are there. And also like the e-money. For Australia, actually, they have the restricted authorized deposit taking institutions, which could be e-money providers. And that's why it's only about credit transfer, but that could be linked to e-money as well. And if you see the use cases has been growing on this infrastructure. Some of the countries started with only P2P, but over a period of time, they have enhanced this infrastructure to support other different use cases as well. Like for Brazil, you see all type of transactions are facilitated. If you see the case of India, when the IMPS started, which is the first fast payment system, it was P2P, and even for P2M, it was sort of a category of P2P payments only, though they were a different category, designated as a different category. But now it supports a host of use cases on the UPI, including now the IPO payments as well. Similarly, if you see the Thailand case, almost all like the request to pay transactions. So now it is it's a full transaction now in this case for both UPI and Thailand Pay Now. Prompt pay, sorry. So support both this request to pay, wherein when a transaction, you are making a transaction from payment to pay a merchant, the merchant can request money from you for that. And you only if you authenticate the transaction, that goes through. So these are safety nets which have been brought in these cases as well. The access channel, if you see, are growing across, and QR is one of them which has been largely educated because of the asset-light infrastructure and no further remembering or sharing of information is there. You scan the QR and pay it. The LIS is one of the, as I said, it is about not sharing of your account details, but you can use alternate details for that, like your mobile number. You just share your mobile number, and most of almost all the FPS which have been implemented facilitate LIS, mobile as an LIS. In Brazil, you have the random number as well, which is a system generated number that could also be used if you don't want to use your mobile number. In Australia, you have the Australian business number as well, which is there. In India, you have the UPI ID. UPI ID is the ID which you can select yourself, like I want to use my Nilima @ whatever is my PSP, or if I use the general one, then it is at UPI. So you have those options of doing that. We move to the next, and I think with this, I will be passing on to my colleague, Andrea, and I think, Andrea, I was on time for it. Thank you.
That was perfect, Nilima. Thank you. And I am Andrea Monteleone, financial sector consultant at the Payment System Development Group at the World Bank. And I build on top of the slide that Nilima just presented, because we saw that fast payment systems around the world are at different stages of what we see as an evolutionary path towards full maturity of the system. And the first step of this path is typically the launch of the system with a limited number of participants, normally the larger banks in the country, and the support to one payment instrument, typically credit transfer, to enable few use cases, P2P and P2M typically. Then the system evolves and expands across all dimensions. Participants increase in number to smaller banks and non-bank PSPs such as fintech. Then new payment instruments and use cases are supported. For example, Nilima mentioned G2P and B2P payments, so bulk payments, for example. Also, as the system evolves, new use cases and access channels like QR codes are enabled. Lastly, the system reaches full maturity when participation is broad, so all banks are connected directly or indirectly to the system, and a multitude of non-bank PSPs can offer their services in relation to the system. Then at full maturity, the system, we saw that with PIX, enables the full array of payment instruments and use cases. And lastly, the system, when mature, is fully interoperable. Interoperable meaning linked domestically with other payment systems and cross-border, so internationally with other fast payment systems in other countries. So we can skip to this one. What are the key factors of success for a system along this evolution journey? We can look at some of those that we observed in the case of PIX. The first one is the deployment of a communication strategy aimed at building awareness and educating the target users on the service. In the case of PIX, we saw that Banco Central do Brasil created a strong brand, identifiable, with also the reference to Banco Central do Brasil to build trust in the user pool, which is key for uptake of the service. Also, in the case of PIX, a multi-channel communication plan was rolled out, partnering with multiple stakeholders. Another factor of success for fast payments is the low cost for users. Obviously, a lower cost drives wide adoption and usage. In the case of PIX, we observed that there is a no-fee policy for individuals, and fees for merchants, for businesses on the other side, are kept as low as possible. But how this vision is pursued in practice? First of all, the system in the case of PIX is kept at low cost for participants. For the cost of processing transactions for participants is low. Also, Banco Central do Brasil fosters competition in the system, and obviously competition puts pressure on cost to reduce. A third factor of success is the application of a user-centered approach, and as said earlier, the support to all use cases. Let's look again at PIX. PIX was designed to deliver a convenient and smooth user experience, and for these requirements were issued for PSPs to offer a frictionless user experience in app. And the PIX service was designed to be ubiquitous, meaning that all target users, being then individuals, businesses, or governments, would have found in PIX a convenient solution for all of their payment needs. A last factor of success is related to the governance of the system. So let's look again at PIX. Besides the requirement for large PSPs to participate in the system, Banco Central do Brasil created, from the very step of the conceptualization of the system, a platform to foster an open conversation, including the extended ecosystem of stakeholders. So not only tier one stakeholders, so to speak, but all relevant entities that could play a role for the development and success of the system. And this inclusive governance that took place then in practice in the PIX forum, an open platform to talk, to raise interest, goals, challenges for the development of the system, was one of the key factors of success for PIX. So if we have key factors of success, and these are just examples, on the other side, we have the challenges that typically fast payment systems have to address. The first one is related to fraud. Fast payments are instant by nature, and as such, they are exposed to new forms of fraud, potentially more dangerous as they happen in real time. For this, these systems have to have in place adequate and modern fraud prevention and addressment mechanisms. Another challenge is represented, we just saw the case of PIX on how to address it, by the need to define an inclusive governance. The risk when defining a governance framework is for that to be exclusive, so to not represent all stakeholders impacted by the system. But in order for a system, a fast payment system to succeed, it is important to have all stakeholders committed and ready to invest in the development of the system. And to do so, you need to represent them in the governance of the system. A third challenge is represented by the need to strike a balance between the objectives of public policy, so those of the policymakers, and the interests of the participants in the system, which need a rationale, again, to invest in the system. This trade-off often is visible in the pricing models for participants and end users. A last challenge is represented by the need to design and implement a legal and regulatory framework that, on the one side, protects consumers and businesses, so the users of the system, the population, and also ensure the stability of the payment system, and on the other side, does not compress too much the potential for competition and innovation, which are two of the key drivers for the development and enhancement of a fast payment system. So we spoke about factors of success and challenges. Let's spend a minute on future trends that are relevant for fast payments. The first one is cross-border interoperability. We spoke about this. We do not want fast payment systems to develop around the world with a silos mechanism, so as a standalone initiative. Why? Because fast payments have the potential to deliver benefits also in international payments, B2B payments, but also P2P payments. Think about international remittances, which for developing countries, for example, are the main source of income for many families. So for these payments to be timely, safe, transparent, and cheap is crucial. And the way to do so is granting cross-border interoperability between domestic systems. A second trend is related to the interplay with CBDC, central bank digital currencies. CBDC is a hot topic. All jurisdictions are starting to work on it, to think about it, and often the question is presented in the public debate in the terms of should a jurisdiction invest in CBDC or fast payments? We do not see this to be the case. We don't see CBDC and fast payments necessarily as alternatives. We rather see here a potential road of leveraging fast payment rails to power CBDC-based solutions. Then we have other two trends that we can look at together. One is open banking and open API, and the other one is represented by the innovation in digital financial services, enabling new use cases and services. Here, we can look together as these two trends by saying that digital innovation and regulatory innovation open room for new services and use cases, such as payment initiation, account information aggregation, buy now, pay later, digital lending, request to pay. And the key for fast payments is for these services to be made available for fast payments like they are to other payment systems like card payment system, because these new use cases and services can help increase and enhance the value proposition for fast payments for end users. So closing the part on the essentials of fast payment, I would like to close my speech by presenting Project Fast. My colleague Nilima already introduced it. Project Fast is an ambitious initiative supported by the Bill and Melinda Gates Foundation, and we are working on it with the goal of accelerating the adoption of fast payments worldwide. We do so by working on 5 key pillars. The first one is the production of an extensive body of knowledge made available on our website that you can find online at fastpayments.worldbank.org. This body of knowledge comprises a development framework to guide policymakers in designing and executing fast payment systems development projects, a live tracker so an interactive map of all fast payment initiatives worldwide, providing also the KPIs of these initiatives. Then we have a set of technical focus notes elaborating in-depth aspects that are relevant for the design and implementation of fast payment systems, such as governance framework, scheme rules, participation criteria, messaging standards, for example. Then we have a portfolio of case studies analyzing different fast payments initiatives around the world, ensuring proper representativeness of different models and different geographies. Then we have a second pillar, which we define as capacity building. Here we refer to bilateral and multilateral sessions that we deliver, for example, webinars or trainings or workshops, through which we support our partners in building capabilities, knowledge, skills, and experience on fast payments. A third pillar is represented by convening global stakeholders in the field of fast payments. We do so in order to, first of all, foster an international dialogue on the topic, and secondly, to help the creation of a concerted, harmonized development agenda worldwide. Our partners include international standard setters, industry bodies, central banks, regional development banks, our sponsors, but also other bodies inside the World Bank, like the G2PX group working on government-to-person payments, or research institutes and academias. Then the fourth pillar of Project FAST is represented by the technical advisory, and these are the projects that we offer to our partners to support them across all stages of fast payment development, from the conceptualization to the design, to the implementation and go live of the system, but also including and extending to the post-implementation enhancement of the system. We saw that fast payments are a journey, are not a standalone infrastructure development project. Last pillar is financing. Nilima mentioned it already. We refer here to the lending projects that the World Bank makes available to our partners to support them when they want to invest in the development of fast payment systems. Technical advisory and financing can be bundled to build synergies in our support to partners. So let me close my speech by thanking you and by renovating that we do believe that fast payments have a transformative impact. They can drive financial inclusion, and especially in developing countries, they can help close the gaps in access to financial services. They can help reduce the gender gap, the gap between rural and urban areas. Fast payments can also, on the other side, support sustainable development and digitalization of economies. And for this reason, we are fully committed to support their adoption worldwide. We have a dedicated team co-led by Nilima, my colleague, and Oltibanka, under the guidance of our global practice manager, Arish Natarajan. So we are ready and happy to support. Please feel free to reach out to our team to cooperate on this topic, which is crucial for future development of financial services, especially in developing countries. So that is it. Thank you for your attention, and I leave word to Bruno.
Thank you very much, Nilima and Andrea, for a fascinating presentation, and congratulations to you and the rest of the World Bank group for this initiative. I take it from Nilima that we were exposed to the geographical breadth of these initiatives, because it looks like half of the world is already working on fast payments, and also Nilima showed a little bit of the qualitative changes. Some countries, especially those that are the four that seem to be ahead of the curve, as Nilima presented, have a little bit qualitative differences, whether it's based on whether the system's based on credit transfer or e-money. And then Andrea, as if I understand it, put this in a dynamic context, and so you showed us what you referred to as the evolution journey and some thoughts about the future after what you describe as maturity, which is apparently where Brazil is. And so this is an excellent segue for us to transition to Rafael from the Brazilian Central Bank to enlighten us a little bit on this topic. Thank you so much.
Thank you, Bruno. Good morning for some, good afternoon for others. First of all, I'd like to thank you for the invitation for this event, which is very interesting for me. Even though I've been working for the central bank for the past 15 years in the banking operations and payment system department, which is the operator of the financial market infrastructure, which is PIX-based, my comments do not represent the institution, even though I must admit I'm enthusiastic about PIX. Well, network externalities are very important, are crucial in financial market infrastructures in general, but are critical in retail payment systems such as fast payment systems. Due to that, even though private solutions, especially those provided by big techs like Alipay and WeChat in China, could enhance financial inclusion, of course, they might be detrimental to competition because they scale very fast. That is why regulators, in general, especially central banks, must regulate at least access and participation to fast payment systems. Prior to fast payment legal basis here in Brazil, which was in 2013, we experienced that with credit card industry dominated by Visa and MasterCard. Of course, there were other operators, but they were the dominant ones, whose local operations are still owned by major banking conglomerates. Of course, they helped to concentrate the market. However, this parsimonious approach based on access and participation made difficult to implement in some jurisdictions. It explains, for example, why PIX is operated by the central bank. PIX in Brazil, it's a payment scheme based on instant payment system operated by the central bank, by the department I work for. Besides, PIX, we saw in the Nilima presentation, it's one of the fastest growing fast payments payment schemes in the world. It's based on two reasons. On supply side, from financial industry perspective, participation in PIX is mandatory for bigger, largest financial institutions. I don't remember exactly the criteria, but it's based on active clients. I think it's 5 million, but I'm not sure about that. But which means the largest financial institutions, their participation in PIX is mandatory, which is in Brazil, it's 30-something institutions. And PIX has almost 800 participants among direct and indirect participants. So most of them are not mandatory. They are on a volunteer base. But of course, the largest one are there. The smallest one, it's almost impossible from their business model perspective to be outside of PIX. Well, from the demand side, from the users, for us, PIX is free of charge for natural persons and individual micro entrepreneurs. For other business, such as small business transactions, there are fees on transactions, but they are significantly lower than debit and credit cards, which means PIX gives an alternative, especially for small business, because the fees on credit and debit cards are very expensive for a small business. Less than 3 years after being launched, PIX has 137 million natural persons. Some people have more than one access, but there are 137 million natural persons and 12 million legal persons connect to it and settles more than 1,000 payments per second. Of course, it's an average, which means, I mean, on weekends and at night, the number of transactions is much lower, which means the capacity of PIX is way bigger than that. I mean, some thousands, I don't know the exact capacity, but of course, if the average is 1,000, the capacity is like 10,000 or something like that. Of course, PIX is not viable for smaller monetary areas because it has a fixed cost, very expressive. So, but many central banks could operate a single platform, for example. Another alternative, as Andrea was explaining, is using CBDCs, central bank digital currencies, as an alternative to fast payments. PIX in this case is, for example, fast payment based on traditional messaging standards. And Bahamas is one great example of that. They have the $10 initiative. It's for retail payments. I must, here in Brazil, for example, we don't have a CBDC. We'll have an experimental period of CBDC, but it's not intended to that because we have PIX, which is it's working well. In many emerging countries, another issue, very important, is remittance. In Brazil, I'm not saying it's not important, but the flow of remittance is less than $10 billion a year, less than 0.5% of GDP. For many emerging countries, it is more important, such as, for example, El Salvador. Because of that, it's desirable that fast payments is interoperable with other fast payments, or at least use ISO 20022 messaging standard. And PIX has used that standard, which is very good for interoperability. And of course, now many central banks are launching their own CBDCs, and it's desirable, and the innovation hub of BIS is trying to warn central banks that those central bank digital currencies must be interoperable, and there's no one model of doing that. Last but not least, it's a cliche in this kind of debate, but there is no one-size-fits-all solution. The common thing is constant dialogue among regulators, overseas supervisors, central bank, and sometimes they are all the same, financial intermediates, and the society, because they are the users. And in Andrea's presentation, he talked about that. It's one reason, I mean, that's why I think PIX is so successful. So the central bank, and I say this, use this word, we as regulators, we don't know, we are not operating the market, we don't know about business models. So this dialogue is fundamental because there are many conflicts of interest and things that this kind of honest and open debate would help. Well, thank you. I think I didn't use my 10 minutes.
We would be happy to listen from you for more than 10 minutes. And it's fascinating to see that the central bank the Brazilian central bank being in this position of maturity, to use the phraseology of Andrea, is in a position, as it seems, to give advice to other countries that wish to, pursue the same path. And so you mentioned you're pretty aware of the comparisons with other countries that have more remittances and so on. So this is fascinating. Maybe later on, Rafael, you could elaborate a little more if we have time. But in the meantime, I would like to open the floor to José Luiz Homem de Melo. Would like to listen to you. We know you're one of the leading attorneys in the payments industry in Brazil, and your perspective is very welcome. Thank you very much.
Thank you very much, Bruno, for the invitation. And FGV is really a pleasure to be back at home and to share with you some thoughts. Difficult to comment after interesting presentations from Nilima, Andrea, and Rafael, but I thought I'd like to give 5 comments generally on items that were touched, I think, from all of them with a specific view. I think my first comment on fast payments is that this was very linked to the development of technology, and specifically in Brazil, the access to mobile and cell phones was critical, I think, to the development of these characteristics. In Brazil, more than 95% of the population has access to mobile phones, which made this kind of initiative from the central bank help to be very successful. And I think Brazil is seen as a country of population that welcomes technology and uses technology on a day-to-day basis. So this would be my first comment. My second comment was linked to many comments that Rafael did, and Nilima and Andrea also mentioned, that of course the model used by the country affects the effectiveness of the fast payment model. And in Brazil, I think Brazilian Central Bank has been very fortunate of creating a model that included from the beginning all types of transactions that could be entered to using PIX, and also the cost structure, I think, was very critical, and also how the central bank brought the private sector in forums and in discussions that were involving and led to the final development of the product. This participation of the private sector in all development was very, very important, and we accompany our clients in these forums, and how this evolved was critical, I think, and very important for the success. And I think we have this structure where the model is operated by the central bank itself, in addition to be the supervisor and the regulator. We see this in some fast payment solutions for some countries. I think India is also a country that has a public infrastructure with private sector pegged on the private infrastructure. But this structure allowed a lot of innovation by direct and indirect participants to build on the PIX infrastructure. So I think we talked about a lot of efficiency and competition, and this platform was very well thought of, creating a level playing field and bringing the private participants as creators of the solutions for the clients. And in some countries, you have more the private sector taking the lead on these. For example, in China, you have two main players that take care of the problem of the system, and in other countries, also the private sector is leading this. So how you build up the model is critical, I think, for success of fast payment and the use that people are going to make of it. My third comment is the importance with starting, of course, on the payment cases, but little by little being able to add new use cases, as it was mentioned. So in Brazil, we started with the payments, and then quickly after, we had the possibility of withdrawal of money and with PIX Saques and PIX Troco, allowing the users to withdraw money in merchants, and new use cases being built up in the platform with time. And we know of a schedule, at least in Brazil, to include guaranteed and credit PIX, to include products of buy now, pay later, which is the installment PIX, and also direct debit instruments. So all of that are being created with the participation of the private sector on the top of a payment system that is already working and working pretty well. So the creation of new products embedded into fast payments, I think, also has been a model of success, and other countries could maybe take advantage of that as one benchmark to consider. The fourth comment I'd like to make is the issue of fast payments also being catalyzed by open finance. I think Andrea touched on this issue, and here in Brazil we have the possibility of payment initiators of starting transactions that could be done through PIX as well. So it creates new possibilities for private players to interact with clients and be able to access client information, and for clients to aggregate it information in different institutions and be able to use them more effectively. So it's another agenda that I think it's very important and has a link with fast payments as well. And my last comment would be on an item that Andrea touched a little bit with the international PIX, the possibility of the fast payments being a catalyst of a possibility of transfer through countries in the future. We have many initiatives in this regard, and we have already something that's very interesting that probably was not the purpose of the central bank at this moment with PIX, is that we already have some solutions of neighboring countries of Brazil, like Argentina, Paraguay, and others, that are using the PIX network for payments outside of Brazil. Currently, the PIX structure is for payments from account to account only in Brazilian currency, in reais, but you already have some solutions that allow the client, for example, using a QR code in a merchant, to do a payment from, say, Argentina, and have a PIX from his Brazilian bank account transfers to an agent in Brazil that has another bank account in Brazilian currency, and this agent transfers through an acquirer or not this proceed to the merchant outside of Brazil. So it's a use case that I don't think was thought in the beginning, but it's very interesting, that shows that even without the international PIX coming due, there is already a level, given the great success of PIX, there is already a level of internationalization that is coming from the market and is being put forward by the market, which is, I think, very interesting. And we also discuss a lot the CBDC as also a tool of allowing a cheaper and more neutral exchange of payments in different countries. So this is something that I think will be in the radar in the future, especially when emerging markets have more flexibilization on these FX rules and regulation. So I think that it's a very interesting evolution process that we are seeing in the different models. And I'll stop here and welcome the debate. Thank you so much, Bruno.
Thank you very much, Zé Luis, for excellent comments. let me just say one thing to those watching us on YouTube. You can ask questions through the Slido platform. So I want to welcome your questions so we can read them or pass them on to our guests. We still have half an hour. Let me start by asking myself a few questions. I'm interested in the challenges, Nilima and Andrea, for expanding fast payment systems worldwide. I see there's a partnership with the Gates Foundation. There's a very robust project, and it's making inroads in many countries, as I see in Nilima's world map. I had a very brief experience with the World Bank once, and I was exposed to this, just this, the enormity of differences between regulators worldwide, the extent to which they are willing to engage with innovation or even prepared to engage with innovation. And that was fascinating. I had this experience in part working with Danilo Palermo, who is a World Bank officer that everybody here knows very well. Can you tell us a little bit, Nilima and Andrea, about the challenges for expanding fast payments worldwide?
So you rightly said there is a gap between countries as well on the implementation. And these challenges is more not only from the side of the regulators. Regulators do want to take it, but at the same time, the infrastructure may not support it. And this is where as you said, the various stakeholders and partners need to come in and work on a design which will suit the country. So you cannot have infrastructure which is available in a developed country to be ported to a country which doesn't have that infrastructure. So you have to marry between these aspects. And that is where innovation design comes into play, wherein you take whatever is available, how the infrastructure domestically would be able to support this. Cost is one aspect of it. So whether you build in an infrastructure which is new, or you leverage the existing infrastructure, that starts from the design. So when you are conceptualization this project, you need to take into account the infrastructure which is there in the country. And definitely the telecom infrastructure as well as the electricity which is required is one of the base, which is, or the minimum that is required, and which was already alluded by the other speaker on that, is the mobile network has facilitated the implementation of fast payments and the growth in this. But at the same time, the extent or the availability of this mobile network and the 2G, 3G, or the level of which it is available, that depends, or the solutions which are developed using this infrastructure should take into account wherein this network is available, whether you can have this infrastructure to cater to multiple options, wherein you have the a satellite, or you say the USSD, wherein a person may not have a smartphone. So you have to take into account that aspect as well, wherein you have this infrastructure issues, wherein electricity or the mobile network may not be available 24/7. Then you have to have some sort of an offline mode of access as well. Also is about the literacy level. All may not be literate enough to use this infrastructure. So how you have this assisted mode of payments as well. So in a nutshell, the challenges are there, but you have to look at the options available as well and how you built in this infrastructure. to support, and how all these stakeholders also contribute to from the conceptualization itself to taking it forward for implementation. So challenges as well as mitigation measures to adopt it.
Thank you, Nilima. I add just a couple of insights on this first, and as discussed and also renovated by Jose Luis, what we observed that fast payments, as said, are an iterative cycle of design, implementation, redesign, re-implementation of enhancements. So a challenge, because it can also be seen this way, is not to look at also for project design and vision, not look at it like a standalone infrastructure upgrade initiative, because that is not the case. In that case, a jurisdiction can implement a system that enables some services, but will not deliver an impact on the ground. What is important is to define a long-term vision for the initiative with a path for enhancement, which is based on collaboration between stakeholders. This is the first approach, the first challenge, not to shorten your vision to the short term, but look at it more holistically. Another challenge, without elaborating on it too much, is that, as said, fast payments can contribute an impact, especially in developing countries. And these some countries, at times, the traditional banking sector may face some limitations in terms, for example, of capillarity in rural areas or in remote areas. A challenge there is to strike a balance in openness of the system to also non-bank participants, because they can add value where at times the traditional banking sector might find it hard to sustain their contribute. So these are just two other challenges that we observe in real practice.
This is about the idea over here is about having a roadmap, and that is where we said about design and conceptualization. Then at the time we in the fast payments we have put in 3 phases in the toolkit. If you see, design and conceptualization, design aspect, and then you have implementation aspect, and then you have post-implementation monitoring and redefining, which Andrea said is about once you implement it, you keep on refining it, reviewing it, and enhancing it. So you can start with something. If you are having a challenge, most of the developing countries have the challenge of financial inclusion. So you will start with trying to have that as an objective, set in a roadmap for that, how you will try to include and embrace whatever is in infrastructure available to ensure that you have financial inclusion aspects covered as part of this design phase. Once you implement it, you can put in more use cases. Like we said, it starts with P2P, you start with P2M, and then you go on refining use cases for that. How you enable the other third-party providers to leverage this infrastructure for providing other services. That is where you go on further redefining, redesigning, and reviewing, and adding more infrastructure, or reviewing it totally to say a revamping of it. So these are the certain things that also needs to be factored in. But to start with, if there is no infrastructure, it would be good to start with something which takes care of your immediate requirements. Go on reviewing it, redesigning, and after you review it, you may find certain gaps, and you will also find solutions to addressing those gaps. So review, redesign, and re-implement it. Thank you.
Rafael, I would like to ask you a similar question, but in the shoes of one who is further ahead in the process? Is it all done, or is there still more to be done, and what are the challenges for doing more?
Oh, there are lots of things to be done. First of all, I think our main problem is related to fraud. Not fraud related to PIX itself. The technology is very robust. We don't have any problem with the messaging standards or accounts in central bank. They are related to social engineering. I mean, people who are experts on trying to extract personal information and then have some money and stuff like that. So, and they are very creative. I mean, they create one kind of scheme, and then people discover that, and people understand that, and then they create another one. So we must be aware. I mean, as users and as central bank, of course. So there are lots of things. But there are more things. I mean, PIX is still in this early stage. It's growing monthly at the rate of growing is not as high as it was 1 year ago, but it's still growing. And I think we have two agendas in PIX. One is offline payments, as Nilima talked about that some time ago, and the other is international transactions. Of course, we are not thinking about using PIX to interbank transactions, but just as remittances or tourists. For example, there are some merchants that accept PIX in Argentina and France. So this internationalization of PIX is possible because it's interoperable with other payment systems. It's the ISO 20022 standard. So these two things are very important. And of course, from a financial inclusion perspective, there is one limit. Unfortunately, around 15% of Brazilian population, of course, adults, they don't have internet access, they don't have cell phone, they don't have access to any financial intermediate. So PIX is very good for most Brazilians, but it's unthinkable that in the foreseeable future, we use PIX to substitute currency, for example, because 15% of our population, unfortunately, are not eligible for using PIX because of those problems with inclusion in basic things. But well, that's a problem common in many emerging markets, of course. But I think that's the problem. Fraud. People who are not eligible to use electronic payments, the offline payments, and international, using fast payments for international payments. I would say that that's 4 things.
It's going to keep us busy for some time then, Rafael. I would like to ask a question to José Luis now. You know, we've been covering here problems of infrastructure and digital literacy and things like that. What about the law? And if we talk about Brazilian law in particular, are there challenges, for example, making remittances abroad in a country that still has some foreign exchange controls, integrating it with integrating payment systems with open finance when we have concerns with privacy and so on? What do you see as legal challenges for expanding payment systems in Brazil?
I think we do have some, Bruno, but that is changed a lot with a new law on payment institutions since 2013. And most of the regulation regarding PIX are under the helm of either the National Monetary Council in Brazil or the central bank. So was within their attribution and easier to implement. Of course, we do have a new privacy law that's a couple of years old. And of course, we have banking secrecy as well. But I think the answer to this is really to make the eligible participants to be liable for the information that they access and how they exchange the information with the client, and getting the consent, for example, on non-pay finance, which is a basic requisite under Brazilian regulation and law. And I think we do have a challenge of international payments because we still have some controls on FX, although that has already also been reformed, and from a more principle-based approach, which in theory could permit the creation of legal structures that would allow a more flexibilized system in the future for international transfer of currency, especially if when we use, for example, CBDC and other currencies. So we do have legal challenges, and I also want to mention what Rafael mentioned. I think one of the challenges also on the fraud issue in the different ways that the system can be protected to avoid the different types of fraud that are being tried. But I think in this case has been marginal to the success and effectiveness of the system.
Thank you, José Luis. Let me ask perhaps a final question to Nilima and Andrea. Who leads the initiatives in the developing world, especially in countries that lack on government capacity? Is the private sector filling the space, filling up the space, or do you need government in any case to champion the initiatives and build the infrastructure like the Central Bank of Brazil with peaks? How does the balance of privately versus publicly led initiatives worldwide work?
Which we are looking at, and then I'll come. Thank you.
I couldn't hear you, Nilima. Would you please unmute yourself?
We are doing on the champion part, and then I can come.
Hear the first words. So thank you, Bruno, for the question. And a short answer is even in the group of developing countries, there is no one-size-fits-all answer. And this very same question was raised also during our last Global Payments Week in Marrakesh, where we gathered together representatives of central banks, so policymakers from all around the world. What can be a way to look at it is that the central bank, surely, as Nilima was saying, as a, let's say, a core role of overseer of the system, and can always also act as a catalyst, so to champion, to promote and drive the development of these initiatives, regardless of the very role that it can take as operator and owner of the scheme. The thumb rule for the central bank could be that they can take intervention when they see, let me call it, a market failure So if they foresee a need in the market that is not addressed at the current status of things. So when does this situation configure? When, for example, the private sector lacks initiative because there is the financial sector doesn't have the power to or the resources to develop the underlying infrastructure, or where there is no clear vision for the profitability of the system in the perspective of the private sector, or for the actual potential for uptake by end users. So again, there is no one-size-fits-all question, but when the central bank foresee the value added by fast payments in their jurisdiction and see that there is need to take action proactively to drive, to kick off the development project, then they sure can act as catalyst. Then potentially they can also act as owner or operator of the system, but this also comes to what is the approach that historically every central bank has their own, no, in terms of intervention rather than oversight only purpose. I am not I know I'm not coming with a clear answer, but because there's no one size fits all, but these I believe are the factors to be considered.
No one size fit all approach. That is what it is. But the central banks do play a central role in all these things, for having, as we said in the previous question, about having a vision, objectives very clearly articulated. How the stakeholders come in, whether the stakeholders come in as part of it has put out a vision for having something like a fast payment infrastructure, whether the private sector has come in with their request for taking this forward. If not, maybe the central bank normally will take some sort of role to facilitate bringing in all stakeholders, whether it itself wants to operate or the private sector could help in, or it will help the private sector in taking the lead in this by at the same time providing all the regulatory supervisory clearances and powers to them. That means approvals in this scenario. So the stakeholders' input and coordination is very much important. Now, whether who takes the lead, whether the central bank takes the lead or the private sector, who comes forward with that, depends on market readiness or market infrastructure or the benefit or the business the private sector will see. Private sector normally will look at it from the business angle, but the authorities will look at it from a different angle. So the lens changes from the private sector, and when the regulator looks at, or the public authorities look at it. The public authorities has an objective in mind about financial inclusion, providing services, more of digitization, which we saw in one of our slides which we presented. Whereas the private sector, though it will look at it for digitization, but at the same time, it analyzes the business aspect as well. And that is wherein the role of the regulator and the overseer and the central banks come in. Like with this fast payment infrastructure, what are the other services that could be bundled in? So these are the various things, and that is where the thing about implementation and the role will come in. Whether it is a totally public infrastructure, or you have a totally private infrastructure, or you have a combination of this. So you have various models implemented globally as well. Like if you see, which we saw at the Brazil is an example of a central bank operated system. But if you see in Malaysia, wherein it is the public-private collaboration for operating that infrastructure. In India, if you see the NPCI, it is a private entity. Definitely, the setting up of that of the entity was a vision of the Reserve Bank of India. but it's an entity which has the shareholders of initially when it was set up, it was with public sector banks, but now the shareholding pattern has also been extended to all private players. So it's becoming a user institution. So it can be that you have an entity which is set up for the purpose, then you have a diversification of that. Who owns that could also change over a period of time. So this is not an answer which is saying that you go one model. There is no that approach, but you have to see what is the objective, who would be able to fulfill their objective. Like some of the countries which the World Bank is providing technical assistance. So it is now being taken by the public authority, but with a vision that they will hive off this infrastructure to a consortium or a private entity as well. So with that, but the objective is to start on something, and wherein since the private players were not coming in, it is the public authorities which are taking this initiative to bring this infrastructure. I see Andrea's hand is up. Andrea, please, thank you.
Minute for a comment on my side, Bruno. I think that there is one action that sure central banks can take, and this is a lesson that comes from Banco Central do Brasil. So when the central bank develops its vision, being it for a cashless society, being it for a more financially inclusive society, what they can do is to create a platform to foster an open, fair, participated dialogue. Because that is something that you sure can do, where different stakeholders, the private sector, can express their position, and the ecosystem as a whole can partner on a concerted decision. So that is for sure an action that the central bank can take to kick off any fast payment project once they develop their vision to create ecosystem engagement, to work, cooperate together towards the goal.
So no one size fits all, but at least an open platform for the stakeholders to engage with the central bank and with one another. And I also want to point out, I think Nilima touched on a topic that's very important, which is in between the public and the private, there's a lot of in between, right? So systems that are privately owned but publicly regulated, or publicly owned with participation by the private sector, and of course something that we had not touched upon until her last intervention, which is public sector banks, which I am sure in many countries, especially in the developing world, can have a role that is outsized in comparison to the central bank. But this is a topic for another conversation. I want to conclude here. I want to thank Andrea, Nilima, José Luis, and Rafael, also Ana Paula, our researcher who helped us. And I want to end here. Thank you very much.
Thank you.
Thank you so much.
Thank you.
Thank you. Good afternoon.